All right, all right. Good day. Hey y'all, how you doing? Welcome back. I don't know what time it is that you're tuning in. So if you're not watching live, shout out to you for watching the replay, taking the time out of your day to come back and watch a replay. I want to definitely say welcome back to everybody who's been tuning in to this series. We're on part three, y'all. Part three of our FOREX Success Blueprint because we're going to trade smart in 2025, right? So welcome back to all of y'all that's been tuning in. And for those of you that are new to this YouTube channel, y'all, welcome, of course. And I need you to prepare to take notes. That's number one. And then number two is apply what you learned today. If you have not watched part one and two, then by all means, I highly suggest that you go back and watch part one and two. And then if you need to, come back to this part and watch it again, okay? But definitely continue to come back to get more info, more information on how to elevate your trading experience. So if you've been rocking with me though for a while, thank you. I appreciate you. I definitely appreciate the continued support because I already know y'all, we got plenty of options out here in YouTube, Instagram, TikTok, all of these things. There's so many people that talk about trading in different markets and everything, but you coming here and showing up live, and also for those of you watching the replay, it is like for real, man. I appreciate y'all. You know what I'm saying? For real. So we're gonna get into these formalities. We're gonna get these things out the way. Y'all know the housekeeping, right? So if you're excited for part three of this series, hit that like or that heart button for those of you on Facebook, and hit that thumbs up. Okay, if you're here on YouTube, for those of you here on YouTube, don't forget when you're coming on, especially for y'all watching live right now, go ahead right now, do it right now. Drop your city, drop your state, drop your country, because I know I got some people that's not in the United States that tune in. Drop your country too, rep your country, man. And if you're watching a replay, do the same thing. I'll comment back after this has been posted, okay? And don't forget, those of you that are on YouTube, subscribe to this channel if you're finding this content helpful, all right? And hit that notification bell so that way you know when I'm going live. Now, y'all already know the drill. Before I get into anything else, I have to put this disclaimer out there because we all know that trading and investing in every single market has its risk. But trading specifically has a much higher risk in the foreign exchange, cryptocurrency, and the stock markets. Okay, so trading and investing in any market can contain substantial risk and is not suited for every individual. Every trader and investor learns and performs differently, and thus the results will not all be the same. There's a potential for a trader and investor to lose all or more than their initial investment due to numerous factors. Therefore, it is suggested that each trader and investor only invest money that can be lost without jeopardizing their financial security and or lifestyle. Y'all remember, I'm not a financial advisor. I'm not a licensed trader. I don't trade with the CFTC, okay? I don't work for the government, all right? I'm me. I'm a student, but I love to share the things that work for me. And also, I let y'all know the things that have not worked for me so that hopefully you can avoid them pitfalls like I did, and you can have a better and smoother trading journey than some of us, okay? Remember, all traders and investors that utilize any strategies discussed on this channel any services and products that are shown, you will do so at your own risk. Y'all, please make sure that you take this information, do your own due diligence, and then make an informed decision because past profits do not guarantee future results. All of us learn differently. We apply things differently. That's the reason why we have different results. So remember, y'all, again, this information is being provided for educational purposes only. Everybody got it? Okay, cool. So now let me introduce myself to those of you that are new, because I know some of these names has been popping up on the live stream. I'm like, I don't know who that person is. They're not part of my community. Like I'm familiar with some people who come on live consistently. So it's like, I don't know. So let me let you know who I am, right? My name is Leona Clark, as of course you can see on the screen. I have been in Texas for the past 3 years. I was in the military. I retired after doing 20 years on the dot, y'all. I did 20 years, 3 months, and I was done with the Army, active duty. All those diplomas and stuff, y'all, it take a toll on you. So I hung up the uniform back in 2021. Prior to that, though, I was introduced to cryptocurrency trading first. And then after cryptocurrency, I was introduced to foreign exchange market, which is our different currency pairs. I was introduced to that back in 2018. I did take kind of a break because I was really busy, during that time when I was introduced to it, because I was still active duty at the time. And, I could see myself trading, but it was just like, yo, it's a lot going on right now. So for those of you, when I say stuff like, don't sit it down and just leave it, I'm telling you, I get it. I know that life be life, and sometimes, and you have to take a break and you have to focus on certain things. So I trust me, I get that, but just don't sit stuff down and then don't pick it back up. So that's what happened for me. I set it down. It was kind of like off and on trading between 2018 and 2020 because of what was going on while I was in the Army. But in 2020, I decided I'm going to retire and I do not want to work a job. And so that's when I picked back up trading. I went into a trading company and I just learned all over again. Like I just started like I had never been exposed to trading before. And I did everything that they told me to do. And I have been doing that since 2020. So full time since 2021, April actually of 2021. I've been trading and investing full time since then. And I'm going to tell y'all something. It's nothing like being able to just get up and do what you want to do. You make your own schedule. You don't have to work with anyone, especially for my introverts out there, because that's me. I don't necessarily care for like being in the forefront, doing what God told me to do, but still, is, what I'm saying? Sometimes you get poured out, but being able to just get up and do what I want to do, when I want to do it, how I want to do it, how often I want to do it, that's a freedom that nobody can, pay me for. So that's pretty priceless to me. And that's the reason why I feel like I can share what I share with people about trading, because what you make in the market isn't going to stop me from making anything. What I make in the market isn't going to stop you from making anything. And that's why I can give out so much free game when it comes to trading. And that's what I've been doing since 2020. 2020 is when I started helping people while I was learning. So we was all working together. But 2023 is when I actually branched off and I did my own thing. And I started teaching people all by myself. No more tutoring, no more helping people understand what someone else is teaching. It's solely my programs, me creating it and everything like that. So that started 2023. So with that being said, I have been trading in total for 5.5 years, going on 6 years in December. So that means that I have some experience when it comes to what has worked and what has not worked. And this is what I share with everyone that is a part of my community, Prosperity Calls. So with that being said, we are going to go into part 3. Before we do that, let me go back. We need to cover what we talked about in part 2. So for my people who did not watch part 2 of this series, some of these terms may go over your head because you didn't hear them in part 2, because you didn't watch part 2. You probably weren't available. So if you find yourself like, I don't know what that is, just exit, okay? Exit this live stream, or if you're watching replay, stop watching this and then go back and watch the parts that you have not seen yet. If you missed part 1 and 2, then you may want to start with part 1, okay? And then come back to this. All right, but in part 2, y'all, we started our discussion with technical analysis. So I went over what technical analysis was, and y'all know now, hopefully, now that is just a way of us being able to forecast price movement by analyzing past history in the market. We're looking at old price. We're looking at old volume. That gives us an idea or a gauge on what is likely to happen, and it helps us with identifying trends. It helps us with identifying support and resistance. Again, these terms are what were shared and taught in part 2 and are going to be brought up again in this particular part, okay? So with technical analysis, y'all, the goal is for us to be able to somewhat do a prediction of the likely direction of the market, and that's based on how it has moved, how it has behaved in the past, and that helps us as traders make more informed decisions. Okay. So we're not over here gambling, y'all. When it comes to trading in the foreign exchange market, cryptocurrency market, even for my people trading in the stock market, we all know that there is a system. We use strategy. We don't guess. We're not assuming. We're not just moving off of our emotions, because we know those things lead you to a massive loss of money. Okay. So this is why technical analysis is very important, because it helps us to identify key opportunities for us to decide if we're going to enter the market or stay away. Okay. But it also helps us to identify our exit point. So if we're entering the market because we spotted a trend, thanks to technical analysis, because we spotted a ranging market, and it is hitting key areas of resistance or support, right? Now we know, okay, because of technical analysis, we'll be able to say, all right, price is here right now. I see it potentially going here. This is where I'm going to exit, meaning I'm going to secure my bag, or hey, it may not have went in my direction and it went in a different direction, but either way, I'm still exiting with an amount that I'm comfortable with losing, right? This is why technical analysis is important, y'all. Now, the second thing we talked about in part 2 was understanding price action, y'all. Remember, this is our ability to read and interpret price movement on a chart. Y'all were told and you were shown how to get on tradingview.com. As a matter of fact, y'all, if you're watching this right now, whether live or the replay, and you have not seen tradingview.com, I need you to go back and watch part 1 and part 2, because I go over that in part 2. I don't want you sitting here like, oh, Leon, how did you get to that? How do you do that? How do you do that? Because I'm about to go on it again today, okay? So I did that so that way everyone understands how we utilize TradingView, our brokers, the charts, how we utilize it to help us to make a decision on what we're going to do in the market. So understanding price action, we're able to start identifying uptrends, meaning prices consistently going up, downtrends, meaning prices consistently going down, or sideways markets, meaning prices just moving up and down, but it's not really making bigger moves to the upside or to the downside. It's kind of going sideways, okay? We did all of this on a major currency pair, which is the EUR USD. That is our euro currency and our US dollar. Got it? That is the currency pair that we're using. So we also went on to TradingView and we transitioned. We flip-flop between the candlestick chart into the line chart. Y'all, this was to help beginners. And if you are a beginner, this is to help you as a beginner to easily identify trends, to easily identify when the market is reversing, and also to easily identify sideways movement in the market. Okay. Third thing, if y'all still with me, let me know. Type it in the chat. If you're still with me, you are ready for the third thing. Then put number 3. Number 3, if you're watching live, and if you're watching the replay, put number 3 in the chat or in the comments, y'all. This is the third thing we talked about real quick. We talked about trending versus ranging markets. I gave y'all some statistics, okay? So as I stated in part 2, the Forex market is estimated to trend somewhere between 20 to 30% of the time. That's a low number. However, there's a lot of money that could be made in that low percentage, right? And then the Forex market ranges, meaning moves sideways, right? It moves sideways around 70 to 80% of the time. So this means that most of the time the market is moving within some range. It is bouncing between support and resistance levels that we're going to talk about today, okay, without forming a clear up or down trend, okay? So that's the third thing we talked about. And then I gave you a homework assignment. How many of you did the homework assignment? How many of you did the homework assignment? Say, I did it, Leona. Type it in the chat. If you're watching a replay, type, I did it in the chat, in the comments, if you're watching the replay, right? Let me know if you did the homework, right? Remember, the homework assignment was to select one major currency pair. There are 6 of them: EUR USD, GBP USD, USD CHF, USD JPY, NZD USD, and AUD USD. You're supposed to pick one of the 6. If you need help, like I don't remember, I don't know what it is because you didn't watch part 2, I need you to go to Chat GPT or go to Google, whichever one floats your boat, and then type in what are the major Forex currency pairs, okay? And it'll give you all 6, okay? So you were challenged to pick that, okay? And practice identifying the trend, uptrend, downtrend on TradingView, or if you have a broker, y'all, because you traded for a while, but you set it down, but you still have a like a demo account or whatever, then you can go on that, okay? But you were challenged to identify the trend for that major currency pair, okay? And you also challenged to change it from a candlestick chart to a line chart. So that way it will be easier for you to identify the trends as well as sideways markets, okay? So if you did it, kudos to you, good job. If you didn't, because you weren't here, or you were here, but you just didn't do it, do the homework, okay? I'm telling y'all, it's gonna help you. This is the way for you to make more money in any market, y'all. Remember what they said? They said that you got to do 10,000 hours in order for you to even consider yourself mastering anything. This is one of your hours. This is 2 of your hours, however long it takes you to do it. This contributes to that mastery that you're seeking in this market, okay? So don't beat yourself up or anything. Just remember, y'all, this whole series we're doing is just building a strong foundation. So keep practicing everything that is shown to you. Keep digging, doing additional research for everything that is told to you. And in this particular session today, we're going to take a deeper dive into technical analysis. All right. So if you missed part 2, y'all, please go back, click the link in the description of this video. All right. And it's going to take you directly to it. So that way you can get more into it, get more details. Remember, each of these sessions will have homework. So that means you may have to do a little catching up. All right. If you missed parts 1 or 2 or both. Right. All right. So today's focus, we have a goal, and that is for you to continue learning the essentials of technical analysis. All right. And again, if you're like technical analysis, Leona, what is that? That means you probably missed part 2. Hightail it on back to part 2. The link is in the video. Okay. So you can just click on that link. It'll send you back to part 2. Okay. But what I want to do is just remind you that a clear and precise technical analysis will help you to trade smarter in 2025. And that's what this whole series is about, helping you to trade smarter in 2025. But at the end of the year, I need you to be prepared for 2025, not waiting until December. And then it's like, oh, let me hurry up. No, you have plenty of time to get yourself ready. So that way at the top of the year, after this election and after the president is selected and inaugurated into the office and whatnot, whoever it's going to be, you are ready. You got everything set up. You're good to go. And now you can take the markets by storm, right? That's the goal. So we're going to continue with our technical analysis talk. Remember, in part 2, again, we discussed the reasons why we want to identify trends and, of course, those sideways markets, as well as how to do it using TradingView as a tool to give you that visual. So today, we're going to get into support and resistance, as well as a few indicators that are very beginner friendly. Okay, so if you're ready for support and resistance, I need you to get your notepad out right now. Whether you're using a notepad on your phone, whether you have one and you're actually taking notes with a pen or a pencil, whether you're pulling up on your laptop or iPad, whatever you're using, get it up right now. Okay, so as I'm talking, I need you to make sure that you have whatever note-taking device you're going to use, you have it available with you right now. You have plenty of time to get your notepad ready. Okay, it has been 10, 15 minutes gone, and you should have everything ready to go. Okay, so support is going to be first. SUPPORT. SUPPORT. We're talking about support. All right, this is a price level where a currency pair tends to stop falling and reverse upward. So I need you to imagine that you're playing basketball, because I love basketball, right? So I need you to imagine you're playing basketball and you're outside, you're on a basketball court, wherever you're at, and you're bouncing this ball, right? What it's going to do is hit the ground and then it's going to come back up. Now, if you know how to handle the ball is going to come back up and hit your hand. Now, if you suck, it's not going to hit your hand, right? But every time you bounce the ball, it's going to hit the ground, it's going to come back up. Y'all, the ground is like support in trading, okay? I'm saying it slow to make sure you got it. You bounce the ball, it hits the ground, it comes back up. The ground is our support in trading. This is where the price stops falling and then it starts going back up. So it's just like the ball, it stops at the ground and then bounces back up. So in a chart, support is a price level where price has fallen down, so price has been going down, okay? But it can't quite go any lower because the buyers come in and they're pushing it back up. Buyers meaning people say, hey, this is a really great price. I want to buy this. So you have more people buying that particular thing, right? So it's the same thing in the foreign exchange market. If the price of Euro USD, which we've been using as an example from part 2, if the price of Euro USD falls to a specific area and more people are noticing this, then you may see those people say, this is a perfect opportunity to buy, okay? So it's like the ground is holding the ball from falling further, right? So if that makes sense, I need you to type support in the chat. If you're watching live, for my people watching the replay, I need you to type the word support. I want to make sure that you got it. It's making sense. It's clicking. Trust me, y'all, I'm going to bring it to the chart here in a second, but I want to go over resistance as well. So I'm going to TradingView in a minute, but hopefully you got support. If you got support, let me know, okay? Now we're going to go into resistance. This is the opposite. So support is our ground. Support is our floor. Everybody got it? Where resistance is the opposite. This is a price level where a currency pair, commodity, index, whatever, it stops rising. So price has been going up, right? And then it starts to reverse and push down. So I want you to imagine again, let's say you're in a house, you're inside a building, you know what I'm saying? You and your kid or your nieces, nephews, your kids, whoever, they're playing with a ball and they don't realize they threw the ball up like really hard and it goes up and it hits the ceiling. What is it going to do? It's going to drop back down. It's going to hit the ceiling and it's going to come back down. No matter how hard you throw that ball, y'all, it's going to hit the ceiling and it's going to grow back down, right? So in forex trading, resistance is like that ceiling. Price is going to come up. It keeps getting there, but it can't quite go above it. So every time it hits that level, you see my hand, it's coming up, it hits it, and then for whatever reason, it bounces back down. So in simple terms, resistance is the price level that acts like a ceiling where the price has trouble going higher, okay? So remember, y'all, support is our floor, and then resistance is our ceiling. Anytime someone mentions it, anytime you look at the chart, always think support is the floor, resistance is our ceiling, all right? So we're going to go to the chart, and I need to share my screen. Let's do this. Where is it at? There we go. Okay. So you should be able to see my screen right now. So I'm going to stick with Euro USD because we used that in part 2. I don't want to, throw anybody off, but we're going to do that. So with support and resistance, here's the thing. No matter what time frame you trade on, if you're a scalper, if you're a day trader, I'll say this, if you're a scalper or a day trader, you want to use a higher time frame, at least at the bare minimum, y'all, use the 4-hour time frame. For people who are swing traders, they might use the week, they might use the month, you know what I'm saying? That's totally up to them. But you can, at a bare minimum, for my for my day traders and for my scalpers, the people who want to be in and out of the market, right? I need you to use at least the 4-hour, y'all. Don't do it on smaller time frames because it's too much noise, okay? It's too much traffic. too much price movement, and it's going to be harder for you to get a very clear picture of what the market is doing. So if you tune in to part 2, you already know how to change your time frames. Okay, so we're going to go over here. We have our currency pair. I selected Euro USD. Again, just as a refresher, when you see this little magnifying glass, you're going to click on it and you're going to type in EUR USD. I'm using Owanda. Okay, so you're going to scroll. You're going to just bring your cursor down until you see Owanda on the right-hand side, whichever one you want to use, y'all. But Owanda is a U.S. regulated forex broker. Okay, so that's the reason why I'm using it. So you just click on it and then the chart's going to come up. Now we need to change that chart though from whatever time frame is on for you right now. We need to change it to the 4 hour. So we're going to click next to this where my cursor is at. You should see the same thing, but you may have a different number. It may say 15M. It may say 1D, whatever it says, doesn't matter. We're going to click on it, and then we should have a drop down come up. I need you to find where it says hours, and then scroll down and select 4 hours. Okay, once you select 4 hours, there we go. Once you select 4 hours, now you can, if you want to make it a bit smaller or whatnot, you just bring it over here and just click and drag. Okay, so that way you can make it a little smaller. All right, but y'all play around with it. Okay, I don't remember having anything on here, but okay. But yeah, so what I want to do is find an area where I see that there's sideways movement, where the market was clearly going up, but then it started moving sideways, or was clearly going down and then it started moving sideways, right? So I see this was a downtrend here. I don't know why I pointed at it like y'all see with my finger, but it was down. It was a downtrend. Prior to that downtrend right here, I could see the market was moving to the side, okay? And this is, oh my gosh. And then this, prior to this movement, price was attempting to go up. So I want to see if there's something clearer, and no. So this is clear sideways movement, so got it. So now what we're gonna do is, for my beginners, remember y'all, sometimes it's easier to spot things when you change it from these candlesticks to a line chart. So next to where you should be seeing 4H, to the right of that, it should look like candlesticks, okay? We're going to click on that and we're going to change it to line, all right? Once you press that, it should look like this, okay? If it doesn't, I need you to go back, start over, okay? If you're watching a replay, I need you to pause, rewind, and then do what I'm showing you to do. Pause the video, do it, and then press play, and then pause the video, do it, press play. Y'all listen, this is how I learned how to trade, with watching some of the videos, a part of the trading academy that I was a part of. I would pause the video, do what they were telling me to do, and then press play, okay? That's that online learning, y'all. That's what you got to do. Okay, so now that we know that price was moving up here, and then we see it started to just kind of move. It went up a bit, but then it just broke down. Okay, so wherever it kind of starts to slow down at, that's where I'm going to start. I'm going to put a vertical line. So on this left-hand side, this is our like menu. We have so many options over here. So I'm going to click here, and then, oops, my bad. I meant to click this, and then we're going to go down to vertical, right? I want to select that because I want to identify where price started to go sideways at for me. So that keeps my eyes on that, right? So I'm going to go, so this is where we had our buy, in a sense, like stop, and then price started to move to the side a bit, right? Trying to see if I can find a better one. No, actually, I can use this. No, I'm gonna use this down here. I'm gonna use this one down here. This looks better. This looks way better. So we have our sale happen here, and then you can see clear as day, it started moving sideways. So right here is where that sale ended, and then we saw it kind of push up, and then it just moved to the side, and then it finally goes, right? So this is our sideways market. So what I want to do is look for an area. I'm gonna start with resistance first, y'all. I'm gonna look for an area where price was going up, but it at least hit 2 times. Why do I want that? Because the more times price hits that same area over and over again, the stronger it is. So the stronger it is, the more likely price is to return to that area. Got it? So I want to just get a horizontal line, not horizontal ray, horizontal line, okay? And then I'm gonna click that. And so this is my first peak where price came up. So, okay, I'm gonna just click on that. How many times does price come here from this area right here to over here before it takes off and going to the buy? So it touches it 1 time, it touches it almost 2, almost 3 here. So it's like right there. It's like a hair off, right? And then it kind of comes up and comes back down. So that means we have a couple of areas, right? And on top of that, it's come back down. So we have another touch here. So I could use that, or let's see if I move it up one more. This is clearer. We have 1, 2, clear as day. And even over here, 3, clear as day. However, this one broke through it. So we have 1, 2, clear as day, right? This one was, oh, well, this is 1, 2. So you have 1, 2. So we can actually use this, right? So both of these have 2 at the very least for resistance. I don't want to confuse anybody on this one. So just 1, 2, 1, 2. So either one, they're in the same vicinity, y'all, okay? So I'm going to use this one right here. 1, 2, clear as day, right? So that's our resistance. So now what I want you to do is I want you to change your chart from this line chart back to the candles, because I want you to see how price move with the candles. So that way you can get the idea of, okay, this is what resistance looks like with a candle chart. Okay, the candlesticks. So we're going to change it back to the candles. And I see from where the sale ended to where it started to move sideways, we have price came up. Look at this. Let me make this a bit wider, right? So you can see it, because that should help now that we have that. So price came up, couldn't keep going, and then it pushed down. It actually touched here, right? Came back down. It hovered here and eventually came back down. Came back up here again, couldn't keep going. Came back up again, couldn't keep going. Came back up again, hovered on that line, came down, finally broke it up here. So we have one big area, and then even here, but we have 2 here, and then it hovered on it here. So at least 3, just in form of price coming up, right? So for me, yeah, that's pretty strong. So we could potentially see price come back down here, but I'm not gonna confuse you. So now I'm gonna write, this is my resistance. So I'm gonna click on this line, I'm gonna go up here. I'm taking my time, y'all. I'm not rushing, so that way you can catch up, right? If you're watching a replay, just pause and click on it, okay? And then unpause. So we click on settings, and then I'm gonna type in here. If this isn't checked, check it, and then click your color and make sure you select the size you want your text to be, okay? So I'm gonna put resistance in here. And if you want to remember what time frame, you can put 4HR, 4 hour, right? And then you can select where you want it. I have my bottom right, so that way no matter where it goes on the screen, I can see it on the bottom right-hand side of that line, right? So you select it however you want to select it, center, whatever, okay? So I hit okay. So now I know this was my resistance on the 4 hour. Now I want to identify support. Again, for my people who are just starting out, changing it to a line chart will be easier, okay? Even if you have been doing this for a while, y'all, I still change my chart to a line chart every time for like if I want to do this, identifying my take profit points and whatnot, I still do that. Okay. So now from where we were, where we saw the sale stopped to where it started to go sideways, I want to see how many times price touches a specific area. Is it 2 or more, or is it only 1 time? So again, I'm going to get my horizontal line. Okay, if you need to, hit the arrow and then make sure you got horizontal, right? And I need to click it. Okay, so this is where price ended. So I'm gonna start here. This is where price ended. And then I want to see, so come up. So we have 1, we have 2, clear as day. This got close. And then price broke through it a bit. And we have 3, and then we have a little bit underneath it, right? But this one is actually like right on it, and then this one's barely there. So for sure we have 2, and then we have 2 that are, one is on it, and then another one is a little bit below it. But if I wanted to see, let's see what we have here. So this is clear. We have 2 just in general. Now, if you want to use this because it's only 2 and there's nothing else below it, you will be correct, okay? If you wanted to use this, where was it at? Bam, right here. I would say you could use it because it has those areas. However, I personally would feel better with this because price did not go below it, period. Okay, this is clear as day to us. Got it? And even with the resistance, you could do higher, as well. So here we go. So we got 1, 2, bam. I'm going to use this because it's clear as day. Nothing is above it. Nothing is below it. So now I'm going to change this back to candles. Okay, bam. So now we get to look at it. So from where the sale ended, price came down. It couldn't keep going, so it closed above it. Price came down, couldn't keep going, so it closed above it. Came down, touched, came down, touched. Then it came down, touched, came down again. It went down, but it closed above it. Touch, touch, almost touched, and then it came up. And then it took off and broke the resistance that we had, right? So now again, I'm going to go over here to my settings on this line, and I'm going to type in support. For HR. Bam. Okay. So for me, this is clear as day that price could potentially come here and not continue to go down and push back up. So if I wanted to trade a range bound market, because I have at least 2 points, or if I want to trade a breakout, then I know that this is an area of resistance that price could potentially come to and then take off and go. Okay. I know that if I wanted to trade this in a point of support and I'm expecting price to sell, if it was to break down and come back up here and then push, I know, bam, I'm selling, right? Or the opposite. I know that price is coming down here and I'm expecting it to go up because it's support, boom, I'm buying, right? So y'all, if you're trading inside, if you're trading the breakout, you're going to buy from here on up. If you're trading the breakout, you're going to sell from here on down. Okay. So that's how you can use support and resistance to help you identify areas where you could potentially enter, but also where you can potentially exit. If that makes sense, let me know. Okay. If that makes sense, let me know. So now we got support and resistance down. Everybody got their notes. If you got your notes, we're going to keep it moving because now we're going to go into our indicators. As a matter of fact, nope. We're going to do a quick check on learning, y'all. Quick check on learning. Is support considered a ceiling or a floor in Forex trading? Which one is it? Type it in the chat. For those of you watching live, type it in the comments for those of you watching the replay. Is support considered a ceiling or a floor in Forex trading? Which one is it? Type it in the chat for those you watching live. Type it in the comments for those you watching replay. Okay. Now, if you said that it was a floor, you are absolutely correct. Good job. That means you were paying attention. If you said a ceiling, I'm gonna need you to rewind. Seriously, I'm gonna need you to rewind. Like we need to get this. Okay. This is part of our money making process. So we need to make sure we know the difference between support and resistance. All right, cool. So now we got that part out the way. Now we're going to move into the indicators. Okay. So for those of you that are like, oh man, I mean, I heard of this, but I don't really know. I got you. I'm going to give you two that are most commonly used and are very beginner friendly. Okay. So the first one, I need you to write down on your paper, type it in your notepad, on your iPad, iPhone, laptop, whatever you're going to do. Get ready to type, okay? The first one is called a moving average, like average Joe, okay? Moving average. Moving averages help smooth out price data, okay? Because they take the average of a certain number of past prices and then they plot it on a chart. And it just creates like this smooth line that filters out all the short-term ups and downs in the market, all that noise that I mentioned on those lower time frames. It just drowns all that out, and it helps us to be able to see the overall direction of the market much easier, right? So if you want to use this, I'm going to explain to you how it's going to work, and then I'm going to show you how you can use it on TradingView. And then you can also do this on your broker, okay? Whatever trading platform your broker uses, you can also do that on there. You just got to know where to find it on their particular platform, okay? So how it works is we're going to look for a simple moving average. They have two, but we're going to start out with a simple moving average, okay? And then you all can use the other one, which is called exponential, okay? Exponential. You'll be able to use that one as well. That's the one I use. I don't use simple moving average. However, you need to know about both. Okay. So a simple moving average, which you may see SMA. Okay. It calculates the average price over a set number of time periods. So we're talking about 10 days. We're talking about 20 days, 50 days. Sometimes you may hear people say, I use the 21-day moving average. I use the 200-day moving average. That's what they're talking about. And then once it calculates the average price over those set number of time periods, then it makes the line on the chart. So as new price comes in, the average is constantly recalculated and it's going to make the line move, right? So here's how this helps you as a trader, whether you're a beginner or you set it down and you're coming back, okay? It helps you, number one, to identify trends. So if the moving average is moving up, then it's letting us know that we are experiencing an uptrend. That just means that price is moving up. It's continuing to rise, right? If the line is moving down, it's showing you it's going down, that suggests that we're in a downtrend. So that means price is doing what? Moving down, okay? Now, if you see that it's kind of like moving like this, it's kind of like a little wave to the side or whatever, that means that there's a bit of indecision in the market and it's moving sideways, okay? Got it? So if it's moving up, if you see the line up, that means we're experiencing an uptrend at the moment. If it's moving down, then we see that we are experiencing a downtrend at the moment. And if it's straight line or kind of like a little wave, like a small little snake line or whatever, but it's sideways, and that means there's a bit of indecision in the market and the market is moving sideways. It's not clearly going up. It's not clearly going down. Okay. The second way that it helps is it helps us to drown out the noise, y'all. By its averaging of these different prices, the moving average reduces the impact of those short-term price fluctuations that we may see, and it makes it easier for us to focus on the market's overall direction. So instead of us getting distracted by those small temporary price movements, we have a central point of focus. We already know it's either moving up, it's moving down, or it's moving sideways. That's it. That's all. Everybody got it. Okay. So in summary, y'all, the moving averages give us as traders a clearer view of whether the market is going up, down, or if it's moving sideways. Okay. And it just helps us to make a better decision before we enter a market or consider entering a market. So let me share my screen. We're going to do this again. Do this again. If y'all with me, let me know. Say I'm with you, Leona. And if this is helping you, y'all, if this is helping you, share this live stream. Share, because sharing is caring. I know there is somebody out there that's like, oh my gosh, I've been struggling with support and resistance. Oh my gosh, I've been struggling with moving averages. Oh my gosh, I've been struggling with X, Y, and Z. Trust me, there's somebody out there that needs this and they don't know that it is available. Okay. And it's not your responsibility to make sure they watch it. All you do is just share. Okay. Just like someone shared information with me and now I'm sharing it with you. Now, guess what? You do the same thing. Pay it forward. Okay. So when it comes to these technical indicators, right? You want to place them on the time frame that you're going to trade on. So support and resistance, we already know we need to use a 4-hour or higher, depending on how you're trading. If you're a swing trader, you're probably going to use the 1 week. You know what I'm saying? Maybe the day at the lowest, but definitely the 1 week. You'll more than likely be using to identify support and resistance. However, for those of us that day trade, for you swing traders, y'all, we need to be using a 4-hour at the bare minimum. Bare minimum, right? We should not be doing support and resistance on a 1 hour. But when it's time for us to use the indicators like the moving average, we need to go to the time frame that we're going to trade on. Y'all know I trade off of the 1 hour. And that means for those of you that did not tune in to part 2, but you said I'm still going to tune in right now, I go back and watch part 1 and 2 later. Then what we want to do is we want to trade on the 1 hour because for me, candlestick patterns, which is what I trade, candlestick patterns are easier for me to spot on a 1 hour time frame, and it still gives me the opportunity to make money within that day of trading and not have to wait days at a time to get some profit. Okay. Each candle, y'all, represents 1 hour of price movement. So whether it goes up or down, each candlestick represents 1 hour of that price movement. All right. So what I'm going to do now, and make this a bit bigger so y'all be able to see it when the time comes. So what I'm going to do now, next to where we change from candles to line chart, there is to the right of that, it says indicators. You want to click on that. To the right of where you have your candles and where you can change it to a line chart, to the right of that, it says indicators. I want you to click on that. Y'all remember, you should be on this with me right now. All right. Don't just watch the video and just be like, I'm gonna go to it later, unless you're driving or something, or you're at work and you're tuning in, then I got it. but if you at home, you comfortable, whatever, you should be on TradingView with me. Okay. So we're gonna type in moving average up here where you have this, and then we should see simple. If we don't see it, you can type in moving average simple. And underneath technicals, not the community, underneath technicals, you're going to click on moving average simple. Got it? One time. You don't need to click it twice. Just click it one time and then close it out. And then boom, it should be populated on your screen. If that did not happen, I need you to go through it again. If you're watching the replay, I need you to rewind, then press play, and then pause, do what I show you to do, press play, pause, do what I'm showing you to do. Got it? Okay. So right now, this simple moving average on TradingView is a default setting for 9. And it says close next to that. If you're like, what does the 9 represent? That means the calculation, remember, for previous price is 9 days. Now, let's say you were learning from someone and they said, hey, I use the 21-day moving average. Okay, well, I want to use the 21-day moving average because they're using the 21-day moving average. I want to see what that's doing. Okay, cool. If you want to change it, I need y'all to pay attention. hover over where it says SMA 9 close, because that's the default setting. I want you to scroll over to where it pop up and say settings. Okay, click on that one time, y'all. Just one time. This pop-up should come up on your screen on Trading View. If you're on your broker, because you're coming back into trading, it's gonna look different. On Trading View, this is how it's gonna come up. Now you're gonna hit Style. See this? Hit Style. Okay. I mean, my bad. You're gonna hit Inputs. My bad. Not Style. You're gonna hit Inputs. All right. And then this should come up. If you want to change it to 21-day moving average, where it says length, you're going to change it to 21. Okay. Once you have that, you don't need to change anything else. Then you're going to hit OK. Unless whoever is teaching you, they say, hey, listen, you're going to put 21 and then you're going to change, the next number to this. That's the only time you change any other numbers. If you're going to leave the original default settings, but you just want to change the number of days, then you're going to change that one. Okay, again, click on here, length, change it to 21, hit OK, right? So now it looks a little different, right, from the 9-day. Okay, but we still see that the line is moving up now, and our candlesticks are above it. So it tells us, oh, okay, we might be seeing a buy trend. Now, let's say that they're like, no, I use the 50-day moving average. Okay, so you go back here into settings, change length from 21 to 50. Again, you don't do anything else. You'll hit OK. Cool. See how the line moves. We see that there may be a buy trend about to happen because our line is starting to curve up. It hasn't completely curved up because it's been down, but it's starting to curve up and our candlesticks are above it. That is how we view it. Now look over here and let's see if we can find, so see how this is moving like this. This is that sideways, y'all. This is that sideways. It's not clear. It's not clear, okay? When it's selling, the moving average is above the candlesticks. When it's buying, the moving average is below. So see how it came down, it turned around, boom, now we're coming up. And price is staying above it. So that means we have a clear buy trend. Once it comes here and it's just staying close to it, I would not touch it, okay? Everybody got it? So remember, with the moving average, you want to make sure that you put it on the time frame that you're going to trade off of. Okay? So now I'm going to stop that. And we're going to get back to, let me stop sharing so that way you can see me. And so we're going to get back to the next one, the second one. If y'all are ready for the second indicator, this is only the second one I'm going to use. Remember, I'm giving y'all the ones that are pretty beginner friendly. For those who get into the trading space, and hopefully this helps you with being able to better identify trending markets as well as sideways moving markets. All right. So the next one, write this down, is called the RSI. RSI. This is the relative strength index. Relative, like that's my cousin. Okay. Relative, and strength, like you strong. Okay. Index. INDEX. Everybody got it. So RSI is relative strength index. This helps us as traders to determine what we would call overbought and oversold conditions. So the RSI is very popular. It's a very popular technical indicator that helps traders like myself and you to determine if a market is overbought or oversold by measuring the speed and change of price movements. You don't have to calculate it because the indicator does it for you. So it gives us a value between 0 and 100. And this just can kind of indicate when a currency pair might be due for a reversal. This is not 100% guaranteed, y'all. None of these technical indicators that you will use, none of them are 100% guaranteed. There is a lag with all of them. So you want to use them as a form of like confirmation for what you have already seen with your previous analysis, right? This should not be the only reason why you take a trade. This should be, aha, this is what I saw this is confirming what I saw and what I was intending to do. Make sense? Okay. So how this works, how the RSI works is, number one, we're going to talk about the overbought conditions. Okay. So when price is above the 70 area, this is our average. People use the 60, people use the 80. It's totally up to you. But on average, traders use the area 70. Okay. So when the RSI value is above 70, it means the market has been rising rapidly, right? And the price may be overextended or overbought. So that term overbought is going to be used a lot, okay? And this signals that a reversal or like a pullback might occur soon because the price has gone up too much or too fast. Got it? So overbought, on average, we're looking at the RSI value of 70. Can you use 60? Can you use 80? Yes, you can. But the average that is used is 70. Okay? So that's overbought. Oversold is below 30. So when the RSI value is below 30, it indicates that the market has been falling quickly and it may be oversold. See how I'm using certain words like there's potential, maybe, because there's no guarantee, y'all, with any of this. Okay. So it may be oversold, and this just suggests to us that price could be due for a rebound. You know, it might turn around and move up. So we may see a reversal to the upside because it's been pushed down too far. Price has been pushed down too far. All right. So I'm going to do a quick check on learning. Y'all ready? If you still with me, you ready for check on learning, put check. Put a check mark, put a check emoji in there, or put the word check, whichever one. You ready for the check on learning? I need to see it. If you're watching live, I need you to put the check mark or the word check. I'm ready for check on learning. If you're watching a replay, I need you to still engage like you're here with me. You know what I'm saying? Hopefully you feel like you're here with me, right? So put a check mark, okay, or put the word check in there. So that way I know we good to go. All right, let's run it. So check on learning with the RSI real quick. And then I'm gonna bring it up on the screen. When we are talking about the average, okay, the average usage, what area is considered, what number is used to describe overbought conditions with the RSI in forex trading? I need y'all to type it real fast. What number is that? Type it real fast. Come on, let's get it. Type it real fast. Real fast, real fast. We got to wrap this up. Real fast. Let's get it. Let's get it. Okay, so if you put 70 in the chat or in the comments, if you're watching the replay, you will be absolutely correct. Absolutely. Remember, y'all, it's the average. What is the average? That's why I use that word. Now, what is the average number that is used, or the average RSI value, to tell us that we are experiencing oversold conditions with the RSI? What is that number? Come on, type it in the chat. Type it in the chat. If you're watching the replay, type it in the comments. Type it in the comments. Let's get it. Let's see if y'all were paying attention. Let's see if y'all were paying attention. All right, now, if you type 30 in the chat and in the comments, right, then that means you are absolutely correct. So that means you've been paying attention, man. Good job. I need you to give it up for yourself. Give it up for you. Anytime you get something right and you did not know it before, that means you have now learned something new and you know more today than you knew yesterday. So I need you to give it up for yourself, right? Okay, so y'all will be correct. Listen, y'all, by using this RSI, traders can identify potential turning points in the market. Okay, this isn't an end all be all, but this is where price may reverse direction. So it can help us to decide when to enter or exit a trade. So again, we're using these indicators as a confirmation for what we have already analyzed in the market. We're going to do our regular technical analysis first by identifying support and resistance, doing a top-down analysis, which if you want to learn more about how I trade and how I mark up my charts and stuff, by all means, you can register for day trading one-on-one. That's the self-paced program. Y'all click the link in the description of this video. right? But you can use all of these other things and then add on the technical indicator of your choice. And that way you can confirm or it could deny what you saw, right? So there you go. So let's go ahead right now. I'm going to pull up the chart so y'all can see it. All right, y'all. We an hour in. I'm hearing up, y'all, because we're about to wrap up. We're about to wrap it up. Let's go. Window. Okay, here we go. So again, you want to use this on the time frame that you're going to trade on, right? So I trade on a 1 hour. So that means I'm going to go to indicators again, just like I did for the simple moving average. I'm going to indicators again. And then if you don't have it up like I do, I want you to type in relative, like, hey, cuz, okay, relative strength, and it should pop up. Okay, it should pop up under technicals. If it doesn't pop up under technicals, continue to type it. Okay, so we want it under technicals, not anything else. Under technicals, relative strength index. Select that and then close it out. Okay, and it's going to populate down here at the bottom of our chart. So remember, overbought conditions is considered 70. That's this dotted line. This is the default setting, y'all, on TradingView, okay? Your broker's trading platform may be different. So if you want to use 70 and 30, then you would need to go in and make the adjustments. On TradingView, if you want the 70 and the 30 to be more visible for you, then what you can do is go over here where it says RSI 14 close, go to this little button right here, okay? And it should say settings. When you hover over it, click on it one time. You're going to go to, I think it's style, and you're going to scroll down. Yep. And the RSI upper band, you see how it's automatically default is set it for 70. So that's our overbought area. I'm going to change the color, number one. I'm going to change it to white because I want it to jump out to me. That's number one. And then I'm going to change it from this dash line to a regular line. Okay. And if you want to make it thicker, you can actually go back to the color and then you can go and make it thicker. Okay. And then boom, got it. And then for the lower, which is your 30, that's your oversold conditions. You do the same thing. I'm changing the color and then I want my lines to be thicker so it's easier for me to see it. Bam. And I'm changing it from the dash to the regular line. Now, if I want my 50, where that's neutral, that's where price may be kind of going sideways and consolidating. If I want that to jump out to me too, then you can change the color on that. I'm going to change it to white, and then it's going to be just a regular straight line. Okay, so now this is easier for me to see. I'm going to hit OK. So now I can see it, plain as day. Y'all, if you want to change the color, you want the upper one to be red because it's signaling for sale, and the lower one to be green because it's signaling for buy. Whatever helps you, okay? You do what works for you, all right? So now I see thick white line up here represents 70. So if price were to come up here, then I'm having an idea, oh, price may be preparing to push down, okay? At some point, either new trend or a pullback. If it comes down here, then price could potentially be coming up. So now what I'm going to do, y'all, let's see. This is where it was. So I'm going to work my way back. So let's start. What is where we was at? Okay. So where we were at, we see, I'm going to just go to the left over here a little bit. So I see that that price came above the 70, right? I'm going to have a vertical line here because I want to see what did price do after that. Okay. It didn't quite go down. It stayed up above it. Okay, cool. So now I'm going to do another one. Where was the other one? This is my high point. It went over 70. So I'm going to put a vertical line here. Now I want to see what did price do? Did it go up? Did it go down? Did it stay the same? Like what happened? Y'all, this is a form of back testing. Write that word down. As a trader, you need to back test every strategy. You need to back test every indicator. You need to back test every oscillator. You need to back test like your life depends on it. Why? Because this is going to determine if you're going to utilize that strategy again. This is going to determine if you're going to use that indicator again. This is going to determine if this thing is worth you using it to make you money in the market. Got it? So now I want to do it again. Look, I'm just going to keep doing it. This is going to be part of your homework, right? So I see right here, it came up to the 70. It didn't quite go down. What happens? Right? So you just keep doing this until you see that's kind of close to the 70 here. All right, cool. I didn't click it. Bam. Now let's see. Nothing happens. It just keeps staying the same, staying the same, staying the same. Okay, so there's nothing until here. So now I see it hit the 70 here at this candle. What happens? Price came down a bit. Okay, cool. Bet. So now if you want to see, according to your strategy, like how many pips it moved down, would that be a good trade? Would have been a good trade? Yes or no? Why or why not? Okay. All of this stuff, y'all, you annotate this in your trading journal. Got it? And then do the same thing. Like, so for this one, we have one here. It looks like it went down. Bam. Okay. So it pushed up. Got it. How many pips, according to my strategy, when I would have entered, where I would have entered at, according to my strategy, how many pips did it go up? So I'm going to use this as an example for my people who trade candlestick patterns like me. Okay. So let's do it. So if you trade candlestick patterns, you'll see this is a bullish engulfing candlestick pattern, and then it confirms. Okay. So at the confirmation, which is here, this is where we would have entered the trade. So we would have entered, and then let's see how far up it went. Y'all, this is part of your risk management plan to see if the juice is worth the squeeze, right? So this went up 30 pips, but my stop loss would have been roughly 31. So that's definitely not good, right? Because you want at least a 1 to 2. So for a 31 pip stop loss, I want to see that there's a potential for me to gain 62 or greater, right? Because I want at a bare minimum 1 to 2. Bare minimum, so I can have a cushion. If I take a lesson in the market, I still should be able to end the week in profit. Okay, so that would have been a no-go, right? Now let's see if we can find another one. Here we go. We got another one here, and then this is going to be it, y'all. I'm gonna do these last two, and then we're going to be done. So price comes up here. Where did it hit the thing at? Let's see. So even down here, okay, this is the first one. This is the first one. Then it continues. It's still buying. It's still buying over the 70, over the 70, over the 70, still over, still over. Oops, still over at the 70. So now you see prices starting to come down a bit, come down, comes back up to the 70, up to the 70, and then it finally drops down. Okay, does that make sense though? This is going to be part of your homework, y'all. Please make sure you remember how to get the vertical line and the horizontal line. If you need to watch the replay, go watch the replay, okay? If you're watching the replay and you're still like, oh my gosh, rewind, pause, press the button that I'm showing you to press, play it again, then pause, press the buttons that I'm showing you to press, and so on and so forth, okay? So this is how you can use the RSI to help you to identify if we indeed see a trend and if we indeed are positioning ourselves to either enter for a buy or a sell. Now, you can combine the two with whatever technical analysis you did before opening up those technical indicators. You can use the two to help you make a decision. So let's say we saw this back here. Okay, let's see. We saw this happen back here. Oh man, okay, price is going up. Well, let's see what happens. Well, now you can use your moving average. Let's say I put it on 21, right? So let me go to inputs and change this length to 21. 21, won't you do something for me? Okay, so the 21-day moving average is showing me that price is still going up. So I would not be considering a sale right now, even though the RSI is showing us that we're in overbought territory. The moving average is still showing me that we are buying. Don't mind this right now. We're right here. Candles are above the moving average. It's starting to curve up. So it's telling me we're in buyer's territory still, and we don't see a sale happening at this moment. So I personally would not be saying, oh, I'm about to sell right now, because with the moving average and the RSI, they both are not saying the same thing. Got it? So what I want you guys to do is use one at a time. And then after you have done your marking, whatever, then have both of them up at the same time to see when they are confirming the same thing, right? So like here, so remember the RSI is showing us this. This is above, price is above, still. Price is above, still, even though this is showing us we're at the 70, right? But then, boom, price has now closed below that 21-day moving average. So if your strategy were to say, hey, you're supposed to be looking for the sale, then guess what? This would be your time. Once this candlestick closes, or whatever your strategy tells you to do, you should be preparing for a sale or entering the sale right now. Okay, so in our case, candlestick patterns, we have a shooting star here. This is a confirmation. It confirms below the moving average. The RSI is showing us that, hey, it was above, it was overbought. So that would mean this would be a possibility for us to enter the trade for a sale, as long as our risk to award is there. So bam, I'm gonna hit the ruler here. And then I want to see how many pips did it actually go down. This is a form of back testing, y'all. So it went down 50 pips, but what would have been the stop loss? 42. That's not a good risk to reward. That's a higher risk trade, right? You don't want 1-1, you want 1-2. All right. If that makes sense, y'all let me know. If that makes sense, y'all let me know. We're wrapping this up. Okay. We're wrapping this up. So we're going to stop right here. Okay. Because I gave y'all an example. I showed you those things. I honestly want to just give y'all some time to process everything, okay? Because I know it was a lot of information. I know, but hopefully you learned something new today that you didn't know yesterday. And if you did, I need you to celebrate that, because a lot of people don't even know how to do any of this that you just learned today. So if you're like, oh my gosh, this is so much better, this is providing me with so much more clarity, then I need you to celebrate yourself, okay? So do me a favor, type in the chat for those of you that are watching live. If you're watching the replay, type in the comments, what are some of your key takeaways from this live stream? What are some of your key takeaways? This may help somebody else, okay? And were there any specific things that gave you clarity? You know, were there any specific things that you're going to start implementing or at least back testing this week, right? Drop it in the chat, drop it in the comments for those of you when this live stream is over, drop that in the comments too, okay? Next week, y'all, real quick, we're gonna dive into one of the most important things, okay, to help you maintain profit as a trader, and that is risk management. Y'all notice how each one of these live streams, I throw in risk management. I throw in like risk reward or what I do that a lot. That's because it is crucial for us, y'all. So yep. I'm giving a whole live stream just to risk management. That's how crucial it is to your success as a trader. All right, so quick recap, because I went over the time, but I wanted to make sure that I got those two things out the way. We discussed support and resistance. Okay, support and resistance levels. Remember, y'all, support is like your floor, resistance is like your ceiling. Remember that. Write that down. Say it over and over to yourself, okay? Create some little flashcards, whatever you need to do to make sure that you get this information in your head. Support is like your floor. Resistance is like your ceiling. Price has a hard time going through these areas, and they are stronger when there are two or more touches at the same area, okay? And then the other thing we covered are a few beginner-friendly technical indicators. Number one was the simple moving average. Remember, y'all, this calculates the average prices over a set number of time periods, talking about your 10 days, 20 days, 50 days. If somebody uses 21 day, then guess what? That's what you do, okay? But it plots the line on the chart. Remember, I just showed you guys how to find it on TradingView. Your trading platform with your broker may be different on how to find it, but the information is still the same, right? And then also how to change the time periods to see the difference. So the default setting on TradingView is 9, but you can go in there and change it to 21. You can change to 18. You can change to 50, whatever it is, okay? But I strongly, strongly, strongly encourage you to just back test this technical indicator before you use it in your demo account. Definitely before you use it in your live account with your trading strategy, y'all. Back test everything. Back test everything. Back test everything. Back test everything. That's how important that is, okay? And then the other technical indicator was the RSI. All right, that's our relative strength index. This helps us to determine overbought and oversold conditions. Remember, above 70 is considered overbought, and then below 30 is considered oversold. All right, so now let's get into your homework assignment. Yeah, I'm definitely over time. Get into your homework assignment. Let's run it. So we are going to continue to use that one major currency pair from part 2 of this series. Or if this is your first time and you're like, no, I know which one I want to use, got it. But it needs to be a major currency pair, y'all. No indices, no NAS 100 or US 30s, no Bitcoin, none of that, y'all. I need y'all to stick to major first, okay? Because remember, we're starting over. We're starting from scratch. You're a beginner. All right, so one major currency pair, and then I want you to continue practicing identifying the trends first, but also I want you to now start identifying support and resistance levels on the 4-hour time frame or higher if you're going to be a swing trader, okay? And then also use that line chart if you need it to help you with identifying it. And that's, you can do this with your demo account if you already have one, or for those of you that don't have it, use TradingView like I've shown you, okay? Also, for this technical analysis practice, right, I want you to apply the simple moving average and then also the RSI, but I want you to do them separately first. So do either or first, whichever one you want to do first on your major currency pair, okay, to see if you can easily spot your trends or sideways markets. But then I want you to apply the RSI separately by itself. I want you to use that vertical line, y'all, like I showed you. So that way you can see when the market is overbought or oversold and what it does, okay? I need you to take note of that in your trading journal. And once you do those separately, then I want you to have both of them on there together to see if they line up. If both are showing you this is an opportunity to buy because it's a trending market, or if this is an opportunity to sell because it's a downtrending market, or if this is a time for me to stay away because it's sideways and it hasn't really made a decision, right? Okay. Remember, y'all, please, if you're entering trades with these tools and this information, even if that's your demo account, y'all, take note of how your trades perform. And then I would ask that you share them with us, okay? Share your results, put it in the chat, put it in the comments, especially on the next live stream. And if you have any questions, feel free, y'all, to drop it in the comments of this video, y'all, because I'm going to come back and I'm going to answer those questions. Okay, so if you have any questions, feel free. And if it's something that needs, if I need to put the chart up, then I'll bring the chart up on part 4. Okay, so heads up, part 4 of this series is going to be held Thursday, October 31st, and that's going to be at 1 p.m. Eastern, 12 p.m. Central, and that's 10 a.m. Pacific. So if you're going to join me, I want you to put a number 4. Can y'all do me a favor? Put a number 4 in the chat for those of you watching live. And then if you're watching the comments, right, watching the replay right now, I want y'all to put in the comments, put the number 4. Okay, if you're going to be joining me for part 4 of this, because we're going over risk management. Also, put this date and time into your calendar, put it in your phone, set a reminder on your computer, whatever you need to do. Hit that notification bell, y'all. If you haven't done that yet, hit the notification bell so that way I can see you next week so we can get into risk management, because this is going to save you a whole lot of money, y'all. This is what you want. If you want to save money in the market and not sit here and be like, man, I lost $15,000 trading, and then you don't want to be one of those people. I need you to tune in to part 4. I need you here next week. Okay? Share. All right. So now y'all have your homework assignment. Okay. It's time to put what you've learned into practice today, this week. I need you to get it done. Okay. And I'm going to go ahead now and just end this session. I really have enjoyed it. Hopefully you have too. I can kind of see you have. So but hopefully, genuinely you have enjoyed this session as much as I have. But I'm going to end this, y'all, with my favorite quote, and that is from the legend Arthur Ashe, and he said, to start where you are, use what you have, and do what you can. All right, I'm going to see y'all next week. Have a good one and happy trading. Bye, y'all.